Hello everybody, it is me Mr. Drake, and today we're discussing renting versus buying and which one's right for you. This is a debate that has raged on forever because there are so many variables that can decide whether the decision is right or wrong for each individual. In this video, we're discussing those variables to help you better understand what the right choice is for you based on your current circumstances. Now, I'm not trying to give anybody financial advice, and don't make any decisions based on what I've discussed in the video. I just think it's important for you to be able to make an educated choice based on where you are at the moment in your life and where you see your future. Of course, there are pros and cons to both options, so I'm going to do my best to be as impartial as I can and not show a bias towards either option. But I'd be interested to know though, how many of you viewers are renters or buyers, and are you looking to stay that way, or would you like to make a change to that? Let me know down in the comments which side of the fence you sit. Now, let's have a look at some of those variables. The first variable is quality of living, because if you want to live in a nice £1 million property, it would actually be cheaper per month to rent it than buy it. That's before we even discuss the deposits. A deposit to rent a £1 million property would be about £6,000 to £8,000. The deposit to buy a £1 million property would be about £200,000. For that sort of money, I'd need to go rob a bank first. To rent a £1 million property, it would cost about £2,400 to £3,000 per month. But to buy a £1 million property with a 20% deposit, your mortgage would be about £3,300 a month. So if you want to live in the lap of luxury for a few years, renting is generally cheaper than buying. This rule only applies for high-end properties though, and from the research that I was able to do, it seems that around £600,000 properties are the mark at which it becomes more expensive per month to rent than it would be to buy on a mortgage with a 20% deposit. Under the value of £600,000, it's considered more expensive per month to rent than it would be to buy. For the most part, in this video, I will be basing rent and mortgage costs on the average for the outer London commuter towns. So for prices down south, in the Midlands, up north or in Wales, they're going to vary greatly from these prices. To find out more specific prices for those areas, do some property shopping online. It can be much harder trying to buy a property on your own than with a partner or in a group. This is because of trying to save a deposit and clear affordability checks. So sometimes renting is your only short-term option. However, when you're buying on your own, you're much more flexible and you're able to buy smaller. So you can start with a studio apartment that will get you on the property ladder, where the mortgage will be £300 to £450 per month, and a 20% deposit will be somewhere between £12,000 and £20,000. You will have limited space in these properties, so they're not ideal for a couple living there long term, but you could fit a single occupant in there comfortably. And lower priced properties are also less volatile in event of a housing crash. A 20% drop in price would mean a £500,000 property loses £100,000 worth of value, but a £100,000 property would lose only £20,000 in value. Buying in a group with close friends or family will make building a deposit and clearing affordability checks much easier. This means that you could afford a larger space to yourself with a garden and a driveway that will offer you some of the luxuries that a flat or studio apartment wouldn't. One drawback to this is that all decisions would need to be made by committee though. This will make your options less flexible for things like moving, doing renovations, throwing sick parties, or keeping pets, and so on. You could also rent as a group and take advantage of the amazing rates for high-end properties. For example, whilst researching this video, I found a 5-bedroom country house with a pool valued over £1.5 million. It was available for rent at £3,500 a month. That works out at around £700 a month for a group of 5 people, but it could have comfortably fit more than that. If you have a bad credit history, not all mortgage lenders will reject your application. But if you are accepted, they will charge you extortionately for the higher risk they say that you pose. For more on avoiding exploitative mortgages, I've linked to a video that I did recently in the top corner. If you were to compare the costs of the more expensive mortgages that you would be offered with a bad credit score, you could stand to save thousands to tens of thousands of pounds if you were to just wait a few years. Clear off some or all of the debts that were bringing your score down, and then reapply in a few years' time when you've got an improved credit score. The average cost of 2 to 5 years rent could pale in comparison to the increased cost of a high-risk mortgage, where the risk is determined by your affordability and your credit score. Make appearing like a low-risk, safe borrower your ultimate priority if you're looking to buy a property soon, and maybe use a website like Experian to get some advice and tips on how to improve your credit score. Owning your own home can make moving a much more difficult process because you need to try and line up finding a buyer for your current home with completing the sale of another property. Whether you're moving to the other end of the country for work or you're just moving around the corner to a property with another bedroom because you have a bun in the oven and the little tyke's going to need his own room, it's just as difficult. Then there are the costs attached to moving as a homeowner as well. The estate agent will be taking a cut from the final sale value of the property you sold, and the mortgage lender will be charging you for setting up a mortgage on a new property. However, with renting, you can freely move across the country or even abroad with as little as a month's notice and hardly any costs attached as long as you keep your rented property in good condition. The difference between renting and owning a home in moving are night and day. So if you expect to be moving around regularly, whether it's for work or because you don't want to settle down in one place for too long, renting will give you the freedom of movement that you'll need. However, if you don't expect to move often, maybe a few times in your lifetime, just to get an extra bedroom or to move up the property ladder, then buying is certainly the best short-term and long-term option for you. It goes without saying, London is an extortionately expensive market for you to buy in, but it is possible to affordably rent in, if you're not too picky about your living conditions and depending what you mean by affordable. Working in London offers more career opportunities than many other areas of the UK, especially in tech and in finance. But both renting and buying are much better propositions the further away you are from the concrete jungle. In fact, having looked online, you could buy a 2-bedroom property in Hull for £75,000. In London, you can buy a car parking space for about £90,000. Typically, a deposit for a rented accommodation will be 1 to 2 months' rent. However, as we discussed earlier, whether you're buying a property on your own or with a partner, the hardest stepping stone to overcome to becoming a homeowner is getting the deposit together. A £200,000 property would mean a 20% deposit is £40,000. Now, for a couple who are earning £37,000 a year, if they were able to save 50% of their income by living at home with family, it would take them over 2 years to save that amount. This will drive a young couple who want their own space into renting because of the lower bar for entry. However, as we discussed as well, renting at lower property values tends to be more expensive than paying a mortgage on an equivalent property. Now that they're renting, this couple are only able to save 15% of their salary towards the deposit. This is going to mean it's going to take them over 7 years to get the deposit together. This is the limbo that my girlfriend and I find ourselves in as well, where we pay about a quarter of our income each year towards rent, and that's money that we'll never see again. It's money that could have also been building up our equity stake in a property of our own if we had a deposit. We're quite lucky that we will rent a beautiful property that's well located and well within our affordability. It is also cheaper relative to other renting options in our town. But we're in limbo nonetheless. Living with family is a great way to shorten the amount of time that it will take you to save for a deposit. But you can also use a site called spareroom.com, where you'll find homeowners who are trying to privately rent rooms of their property to alleviate some of their mortgage or maybe even make a bit of profit. There are some really underpriced options available on here, and in the past I've been able to rent for a year paying 50% less than the average rent in my area. You do risk losing some of the independence you were seeking though when you decided to leave the family home. An alternative way to becoming a homeowner is the shared ownership option. This is where you buy a percentage of a property and an investor owns the other percentage. You will then pay off your mortgage for your share and you'll pay rent to the other owner for their share. At least this way, you will be building up a home ownership equity in a property and you'll have the option over time to purchase a larger share of the property from the other owner. So you could start off owning 25% of the property and then build up over time to owning 100%. It is worth considering. Once you've paid off a mortgage, you can continue to live in that property as long as you wish, effectively cost-free. Of course, you'll still have bills to pay. This isn't the case with renting. If you continue to rent into your older years, you'll be renting into retirement and you'll have the uncertainty of potentially being asked to move at a month or 2 months' notice, as well as the continued financial burden. Not to sound too judgmental of my generation or the generations before and after mine, but for the most part, we do not have our retirements planned out, and for many, there's no chance of it happening anytime soon. Now, while I disagree with the notion that your home is an investment, it is by far the cheapest long-term option for living if you're sensible and live in a property that's within your financial means. Generally speaking, a retirement income will be less than the salaries that funded it. So when people retire, they should notice a noticeable drop-off in their income. If somebody's making ends meet in a rental property before retirement, what are they going to do when the income takes a drop? Of course, that's a long way away, and the world could be a very different place by the time my generation retires. But if you'd like the peace of mind knowing that you won't have to rent forever, I'd suggest making plans to become a homeowner before the age of 55, as applying for a mortgage after the age of 55 can become a lot more difficult. So there you have it, the variables that are going to help you decide your answer in the rent versus buy debate. Now it's funny, there are millionaires and billionaires who will never own a home because it's not in their best financial interests. And there are people like me who look forward to the stability and equity of a property as a base to build my wealth from. There'll also be people with the same income as me who want to live in luxury now, so they rent £1 million properties. And there'll be people that earn more than me who have no choice but to rent because they choose to live in London because of the career opportunities. There's no right or wrong answer, there's only your answer. But make it an educated answer with your future in mind. Hopefully, you'll be able to make it an educated answer now that you understand the variables that I've discussed in today's video. If there's any variables I've missed, or you think there's any that I've missed, please let me know down in the comments. I would love to discuss it with you so that other viewers can see the thoughts that people have around the rent to buy debate. The next video I've got coming out is whether overpaying on your mortgage is a good or bad idea. And once again, there's no right or wrong answers. I'm shining the light on the variables so that you can make an educated decision for yourself and your future. Until next time guys, stay cash flow strong, turn your wages into wealth, and I'll see you in the next video. Yay!